So I think we thought, having had several presentations, it would be good to have a bit more time for discussion between the speakers and additional questions from the audience. That's how I'm going to run this segment. And we also decided to split it in two segments. We already had some splitting proposals on the task of central banks, also a topic which has been around for a while. And so we're going to, and that's how we split these two. So these two panels. So we're going to focus on the central banking side. I'll double check that I remember this correctly. But we're going to look more at independence in action, so we can have some direct questions to what's happening. And we're going to look now directly US and Europe. Right? So much of the previous, the three presentations were more focused on the Fed. Otmar spoke, of course, a lot about the ECB also in the general context. But so let's look at independence in action in the US and Europe in the area of monetary policy, where there was a lot of agreement that it should be independent, or that there are good reasons, arguments for having some independence for technical bureaucrats or bureaucratic technocrats. I mean, we've all worked, or many of us here have worked at central banks and supported those technocrats. So I don't mean that in any way disparative. I think, in fact, a lot of the research in my field has not come out of academia, but out of central bank departments doing research. So, including topics such as central bank independence. You mentioned Ken Rogoff several times, Otmar, who figured out that it's optimal to appoint conservative central bankers in the sense that they have a stronger price stability weight than the regular public. But he figured that out while he was working at the Fed. And on the back of that, got a job at Harvard. So that's how I kind of remember. And all of us young economists who went to the Fed then figured out we could eventually go to Harvard, but it didn't work out for all of us. But anyway, so I have here Jill, Fisch, Otmar, Issing, and Levin. We focus on central banking. We don't have another round of statements. I think we go into questions. We're going to try to finish at 5:20, so we recover 5 minutes or so that have been lost. And we go then straight to the second panel, which is more on financial supervision. Now, so I'll take maybe about 20 minutes asking you questions, trying to relate a little bit, and then we open it up broadly for questions. That'll be my proposal. We're not taking votes, but you can complain afterwards. Okay, so my first question would be to Jill. I mean, you went before Andy, so, but maybe you can give us a little bit of reflection. I mean, Andy made some statements and some proposals on where he said multi-policy is really associated with Congress task and supervision with the White House. And so how do you see that? And he had some arguments for that. And how do you see that from your perspective?
Thank you. So I thought that was fascinating. I started off my remarks by saying I didn't know anything about central banks, and so I learned from what Andy said. And I also was really taken by Andy's observation. We had this oral argument before the Supreme Court about central bank independence, and nobody mentioned the fact that Congress was supposed to be in charge of monetary policy. Why on earth didn't that come up, right? So, good lawyer, I read this whole transcript, and I didn't get the point. I needed Andy to explain it to me. But so I'm wondering about Andy's presentation in light of Otmar's keynote, because you made, I thought, a pretty convincing argument about the value of independence with respect to monetary policy. And Andy tells us, well, actually, the US constitutional structure is different from Germany. We really don't have that constitutional protection, whatever it is the Supreme Court does. And I thought Andy also went on to say, you know, there's some good reasons for accountability, and there are some mechanisms that we could use, right? If we had accountability, we might have more sort of transparent setting of goals and assessment of goals, and that might be a good thing. So, I mean, then I'm going to take your position here, but I'm wondering about, Otmar, your reaction to what Andy said, and is this, you know, we can identify some reasons why Germany might be different and might have greater concern or greater need for insulation for independence for the central bank than the United States. But do you think independence is serving some sort of goal that, you know, maybe the U.S. should be reluctant to sort of go down Andy's path, even if there's textual support for that?
I mean, maybe you can take this one. I mean, Germans are known for spontaneity, and so we can actually exactly do what you said. No, but let's do that, and maybe have Andy or Otmar, and then Andy respond. So if you want to respond right to that, and then Andy also.
Jill, I have learned a lot from your presentation because I was focused, it's obvious, on monetary policy and the central bank, but the issue of agencies in this context is much broader. So on the rest, I learned a lot. On the importance of central bank independence, I must clarify that the German case is atypical. And Germans have forgot that independence of the central bank was imposed on us by the US in 1948, when the Republic of Germany didn't even exist, but the Bank Deutscher Länder, the central bank, existed. And the statute of this Bank Deutscher Länder was more or less written by the US. And by the way, the Americans wanted to have this division of responsibility, whereas France and UK representatives were not in favor of giving central bank independence to the new institution. And in 1957, there was, according to the Constitution, the Bundesbank law, and the independence was included that because then Economics Minister Erhard, very popular, insisted. Adenauer was against, but he lost. And for the German people, I think this is a big difference to all other countries. The hyperinflation of 1923 has left a deep mark in the mind of people. And I've somewhat ironized that, saying it must have now implemented in the genes of the Germans. Be it as it be, once I gave a speech when I was member of the board of the Bundesbank and said, this is a pathological relation between the German public and the Bundesbank, because it is due to the fact that after the Second World War, there was nothing to be proud of. Everything was destroyed by the cruel of the wartime, etc. And the stability of the D-Mark was such a strong experience. And this was more or less the foundation of this admiration of the Germans, of the Bundesbank. Jacques Delors once said, not all Germans believe in God, but all Germans believe in the Bundesbank. So this is an expression of this rather strange pathological relation. And the idea that this could be transferred to the European level was stupid from the beginning, because other countries didn't have this experience. So one has to understand the position of the Germans, and it was the example of the Bundesbank, and as I mentioned, empirical research triggered by the high inflation in the 70s in the US, which triggered a lot of empirical studies. And now, when it came to this, to the Maastricht Treaty, negotiations of the Maastricht Treaty, this experience of the Bundesbank and the result of empirical studies came together and convinced all other countries, which none of them had an independent central bank so far, agreed that the ECB should have the statute in which independence is now in the extreme way, so to say, legalized. One has to understand that, and to what extent it's, and my concern was always that signing the treaty is not enough. Keeping the support for independence with societies, 20 societies now in Europe, is an extreme challenge. And without the support of the people, I think legal independence is based on shaky ground.
Actually, tomorrow morning we will deepen both the empirical, what the empirical literature tells us and what the theoretical literature tells us, with Gerhard Illing on the theory side and Sylvester Effinger on the empirical side, or empiricals of independence. So we'll go even further, but in terms of the practicalities, the independence in action, Andy, you talked about, yes, Congress has this task of oversight and it failed, but at the same time, I think you also agreed monetary policy has to be independent. So how exactly do you think could be that accountability or accounting be organized to be more effective in the US case?
So let me say again, I'll express some views. They're just views with a grain of salt, okay? I really appreciate this chance to engage with all three of you, and looking forward quickly to moving toward the general Q&A. Okay, so I'm opposed to the word independence. I think that this is a no, of course, no, if you ask me, like, do I celebrate Independence Day of the United States? Yes, okay. Why? Well, it was a difficult process, but I think in the end it's served well for 250 years that the United States became independent of Britain, okay? The King of England no longer had any authority over the 13 colonies. They became 13 states of the United States, okay? That's independence, sovereignty, okay? The problem here is monetary economists start using that term loosely without checking with the lawyers, if I can put it that way, without checking with the legal scholars, okay? And it's a gross misuse of the term, and it's susceptible to misunderstanding and confusion whenever you talk to a broader audience. Just talk to an ordinary person who's not a monetary economist, and you say, well, should central banks be independent? They might just scratch their head. What do you mean? Okay, but I would say no. Okay, no, they should not be independent. They should not be independent sovereign. Now, the Federal Reserve is close to it, has been close to it up until now. The Fed gets to issue its own currency, it issues its own debt, that's obligations of the United States, but the Federal Reserve gets to, with no oversight from Congress, no permission from Congress at all. The Fed, and we can go through the list. The main point is, it's acted a little bit like a sovereign nation. Okay, and the reality is it's a principal agent problem. And so I think it would be ideal if through the conversations that Volker and Katja help foster, that we could find other words that were more constructive. I like the word of central banks should not be micromanaged, that monetary policy should not be micromanaged, that there should be oversight, that elected officials should be absolutely involved in setting objectives and constraints. But Charlie Calmiris talked about this in the earlier panel. okay? And if central bankers say, well, you can't do that, we're supposed to be independent, I'd say, well, that's too bad, because we live in a democracy, and ultimately everything has to trace back to the population. And we know it's not going to work well. Winston Churchill said, democracy is the worst, I forgot the exact phrase, someone must know it, the worst possible system of all, but it's also better than anything else we've ever found, right? I beg your pardon?
Churchill.
Yeah, Winston Churchill says this. Okay, so we're not surprised that democracies, run into problems, but there's nothing else better that we know of. Okay, so central banks are in a democratic society, period, and they're not independent. And so I think that, I'm sorry, that's just my view. Take it with a grain of salt. Then we can start having constructive conversations about what is the chain of accountability. We got a principal agent problem. How should we design it? Now, this gets to the question of what did the founders have in mind? Why did they give monetary policy to Congress and not to the president? Well, one was they didn't want the president to have unbridled ability to finance wars by the printing press that would devalue the currency. Okay, that was just obvious. And Congress controls the power of the purse, including the money. Okay, and so if Congress wants to fund things, that's Congress's prerogative. But Congress is directly accountable to the public through the election process. Okay, and so when we say, well, Congress has monetary policy, we are saying it's insulated from political interference, because I don't think Congress is going to say, like Nixon did in '71 to Burns. He says, can you kind of help boost the economy this year to help my reelection next year? And Arthur Burns says, sure, we can do that. I can't imagine in a congressional hearing the head of the Senate Banking Committee saying to Jay Powell or Kevin Warsh or anyone else, like, well, could you boost the economy next year so that the Republicans can retain our majority? It's not possible. Congress is 400 people. Okay, it's a public process, so you can't get the political interference that you would have if you had a reporting to the White House. So I'm sorry, I'll stop there.
Okay, yeah, so maybe I wanted to ask Otmar, how do you see, Andrew's problems with or suggestions for moving away from the word independence, and how do you see the accountability, or how could the accountability be better implemented? We can look at the Fed, but also at the ECB.
First, one comment on you, Andy. Of course, nobody in Congress would say reduce interest rates for next year because a number of us want to be re-elected. But they would say we need lower interest rates to foster growth and employment. This would be the way. So for me, your approach is still too close to expose monetary policy to political inconveniences. This is for me the case. I've made quotes to have independence legally founded. To what extent one can, and I mentioned also if the public and Parliament wants to remove independence in a democracy, this should be possible anytime. But it makes a difference if you have just it at the will of the moment, or if you have a legal foundation. So basically we agree that in a democracy it's the Parliament which should be responsible for that, having independence or not. But it makes a difference if you just say it depends on Congress, any meeting in which there might be a majority for what reason soever to take that away. This is for me too easy, too close. We can discuss that.
Yeah, and just respond quickly. So just to be clear, so no misunderstanding here. I agree with what Charlie said before, okay? Monetary policy should be systematic and transparent and rules-based. And so when I'm talking about principal agent problem, I'm not saying the principal should be sitting next to the agent telling them how to type on the computer. I'm saying the principal should establish clear objectives and tools and instruments, which could be, by the way, more than one. I think that question came up earlier, okay? That's okay, but just you got to clarify what are the tools, what are we trying to achieve, and that should be stable over time. And then Congress could change that framework, but Congress is the boss. So I didn't mean to say, oh, Congress can just, in a whim, tell the Fed, cut rates tomorrow. Not at all.
Okay, before I open to all the questions, just one round with all three. Several times the issue came up of instruments and maybe instruments with side effects. We talked about balance sheet policies. Otmar in his speech talked about maybe bond purchases which were very large or very long lasting. So one question is how do we, is there a need to limit that? If so, how? Related to that, also, how the goals are interpreted. I mean, in Europe, we have this situation where, well, the primary goal is very clear, which is price stability, but then there's this statement, okay, given that's achieved or under control, then you support all other policies or goals of the EU, which maybe leaves a lot of room for interpretation. We mentioned climate policy and other things. So, limiting the instruments, what about side effects, and how do we, or interpretation of what's part of the goals, and how do we limit that? Maybe, Jill, do you want to go first, or do you want to go either way?
So, I mean, I think we already flagged with respect to the relationship of monetary policy and other banking functions. We could throw climate in there, but I would also think about goals like job creation. I would think about goals like productivity. And to what extent is that part of a central bank mandate? To what extent do we say, okay, we're going to break that up into different organizations? And of course, the problem with any organization is once you get multiple goals, how you prioritize, what the balance is when things conflict. So again, I'm going to sort of revert back to the Securities and Exchange Commission, right? And the Securities and Exchange Commission is supposed to foster capital allocation and market protection and investor protection. And sometimes those goals directly conflict. And I don't think you can reasonably say, okay, the response is to split, right? To give every agency a single mandate, because among other things, you wind up with too many agencies, but then you wind up with this power grab among or between agencies, right? So, our agency is supposed to be working on job creation, and you're focused on price stability, and that's interfering with job creation. And so, how do we battle this out? So, I think it's an excellent question, but I think we don't want to be sort of too simplistic about the answer. And I wonder, again, as an outsider to this space, if it's fair to say, well, banking regulators, your central concern is, price stability. Again, I understand the German experience in that regard as distinctive, right? But to what extent can a focus on price stability hurt other objectives? And, in the US, we're having that debate now with respect to climate policy, right? Because, you can say, okay, the Earth is going to burn up, and I just read something yesterday that it's going to burn up even faster than we all thought, right? But, if there are people who are starving, or there are countries that can't develop because they can't get access to low-cost energy, right? Those are sort of the countervailing considerations that if you say, okay, my single focus is to cut carbon emissions, we can't really, that doesn't become a sustainable policy. You wind up with too much backlash, I guess.
Short remark on limiting the number of instruments. I'm not in favor of setting a limit, because financial markets might develop over time, so this should remain in the hands of the experts who have to conduct monetary policy. Volker, you raised an interesting question, which is surprisingly almost never discussed. In all central bank constitutions, there is the goal of maintaining price stability. When the ECB organized a conference at my farewell, Paul Volker came, and there was discussion about low inflation. He said, "What are you discussing? Price stability is zero inflation." zero inflation. So if you think about this problem, I think the mandate for central banks should be low inflation. Because I think no central bank in the world at the time thinks zero inflation would be optimal. So price stability is misleading. And in the German public, you can often read in the newspapers what's happening. The ECB is saying 2% inflation is price stability. How come? So
it's groupthink.
The preference would be low inflation. And obviously, central banks are given more or less leeway to define what they mean by maintaining price stability. So we did that in the ECB in October, in October 1998, explained not our goal, but our understanding of maintaining price stability is an inflation rate below 2% maintained over the medium term. This is giving the central bank very much leeway to make such a definition, and then one can discuss it if this is appropriate.
So I think I wanted to return to some of Jill's remarks in the previous panel, kind of what makes it more compelling to have a I'm going to say independent here, but subject to, for instance, the term we're using, we'll use it under objection. The rationale for a more independent agency, and then kind of things that undermine it. And there were two that you mentioned, I think, that are really important for the Federal Reserve, and maybe for the ECB, maybe even for other central banks. One is, how powerful is the head, okay? In the Levin case, which I think seems pretty clear in the United States, if something's done by a single person, like the Consumer Financial Protection Bureau, then it's part of the executive branch, and that person reports to the president. So then there's a question of how powerful is the Fed chair, and I would have said it would be interesting to know, because I'm not familiar very much here, but how powerful is the ECB president relative to the governing council, and how's that been changing over 25 or 30 years? Okay, but for the Fed, I have the answer. And the other one that you said was, how much are these people really experts? And can we define what expert means? Is there a meaningful way to say, yes, the person has expertise, no, they really don't? And I think that as of 15 years ago in the United States, there was a sense of, yes, they're experts on the FOMC, the Federal Open Market Committee that makes monetary policy decisions in the United States. The members of that committee are experts. Jim Bullard, Charlie Plosser, Jeff Lacker, Ben Bernanke, Janet Yellen, John Williams, there are a whole bunch of them, right? They all have a high expertise in understanding inflation targeting. They've all hopefully read all cover to cover Otmar's textbook, okay, and listened to his lectures, okay, and very familiar with the background and the history of the Bundesbank. Like, they have expertise. But what's happened in the last 15 years in the Federal Reserve System is many of the people sitting around the FOMC table, one was a consultant for McKinsey. One was president of a university coming from a science background. And, one worked on Wall Street. We could, various backgrounds from a standpoint of like a corporate board, it might look brilliant, but not really a set of experts on monetary policy. Now, one consequence of that is it concentrates even more power in the chair, because the Fed chair sets the agenda, the Fed chair directs the staff who work on monetary policy issues, and so it's become more and more, I think, fewer and fewer dissents, fewer and fewer compelling differences of viewpoint, more and more like many corporations where the CEO, who's chair of the board, really makes the decisions and everyone else shows up for cocktails. And all I'm trying to say here is this is corrosively undermining the case for the independence of the Fed. And when the Supreme Court looks at all this carefully, and maybe not this spring, but 5 years from now, says, maybe they should be part of the executive branch, because the Fed chair, by the way, has a 4-year term, and no one has been talking about this. Why? Because the ECB has a longer term. The governor of the Bank of England has a longer term. The governor of the Bank of Canada has a longer term. The Fed is really unique in having a 4-year term that practically aligns with presidential cycles. And so the Supreme Court could say that the Fed's already part of the executive branch. Its head is appointed by the president after every election. The Fed chair runs everything. Everyone else at the Fed are just minions. Okay, then make it part. And I think that would be unfortunate, because I think under the Constitution it should be reporting to Congress, not to the White House. Well, you've got to make some changes to the principal agent problem if you want to keep that.
Okay, so let me now open the floor for more questions. So I have Sylvester here, Chiara Ciglioli. Maybe let's start with the two of you, and then I have two more. But let's take these two questions and have some answers.
I raised my hand many times, but
yeah,
you
you're
the
first.
other way, Volker. And I wanted to
Sylvester
react
first.
Well, I wanted to react to Otmar's statements.
Okay.
And I think I'm now going back in time. Yeah, I'm very old, of course. The 80s, late 80s, when I worked at the Bundesbank. And one of my mentors was Helmut Schlesinger, who died more than a year ago, 100 years of age, Mr. Bundesbank. I had many conversations with Helmut also when I succeeded him on his Humboldt chair. And I always ask, now there's a whole literature about central bank communication. Tens, hundreds of papers. And I asked him, I said, Helmut, can you explain me? No, it was first Professor Schlesinger and then Helmut. And can you explain me these Presseauszüge of the Deutsche Bundesbank, all those lectures you give? Why do you do that? It's so much work. You know what he said? And that was in the 80s. He said, Sylvester, understand, the Gesetz über die Deutsche Bundesbank can be changed by the Bundestag and by simple majority. By simple majority. So we have to convince the public. What Otmar said about Jacques Delors, not all Germans believe in God, but they all believed in the Bundesbank. That is a process of communication by the senior Bundesbankers to the German public. Why do we do that? Why are we maintaining price stability, low inflation? I can tell you, Helmut Schlesinger, he was a son of a Schreinermacher. I don't know how you translate it, but somebody who made... And his father, the total fortune was evaporated during the Weimar Republic. So he experienced hyperinflation. Now that is geprägt, as the Germans say. It is in your mind.
That's the rest of the question.
The question is, how do you communicate with the public? And that's beyond the politicians. And I think it's one of the major concerns I have. You can communicate with the experts, like us here. But you have to communicate to the public to convince them why it's so important that there is low inflation or price stability, how you want to define it. And I think that's now not anymore happening. And that has to do with, I think, the responsibility of central banks, but also with the way you communicate beyond the public.
Okay. One thing also, maybe I want to interject that there seems to be a bit of different view on what was really in the constitution for the Bundesbank back then, and what back then, not now, where it's delegated to the ECB, in what exactly could easily be changed for the Bundesbank. Now, any one of the lawyers wants to comment on that? What they think was in? So here's another Bundesbanker lawyer who says he's right. But I had some people saying no. But anyway, so unless someone speaks up or can speak up later, we can settle it again. But I think it's a very valid question, nevertheless, that yes, you have to convince the public. And before I give that over, maybe Chiara, you raised your hand earlier and I missed it. But anyway, Now it's you.
No, I didn't raise it before because I have three brief remarks.
Okay.
So the first is there were some talks about the objectives and the instruments. And I think there was at some point a little bit of confusion. I think everybody agrees, at least most of the people, that there should be many instruments. The instruments are the tools to achieve the objectives. So that is, in my view, clear that there should be. Now, on the objectives, Jill, you were saying, I don't object to many objectives. Nobody objects. The issue is the independence. So the more objectives you put in, the less you can give independence, because then someone needs to check how you balance. This is the issue. And thereafter, you can have one agency with many objectives, that is fine, but then the independence becomes an issue. The central bank, at least in Europe, has one objective. One primary objective, the others are clearly hierarchically subordinated. That makes it possible to give it an independence that is constitutionally guaranteed. We are in a different situation, probably, as far as I understood today. But this is the reason, yeah? And the third point I wanted to just defend, because there was a little bit of civil servants bashing. And the civil servants are not there to do whatever they please. This concept of independence is not, I wake up and today I decide how I use the institution. No, the civil servants are bound, and incredibly bound, by the mission of the institution, which has been established by the legislator or even the constitutional legislator. What they are independent from is the whim of the moment that someone wakes up and says, you should lower the interest rate today, for whatever reason. So this is just to be very clear, because it's not, independence is not arbitrary, is not whatever you please. No, it is, you are absolutely bound by the mandate of the institution. Thank you.
Thank you. So some reactions to that? Who wants to react to that? Okay, well, you got agreement from Otmar? And also Sylvester's comment. Yeah.
Sylvester's remark on communication. Again, the German experience is unique. It's unique. The monthly bulletin of the Bundesbank at that time, we delivered the monthly bulletin to the journalist, and there was an embargo of 3 days. And then just they reported in all German newspapers what the Bundesbank had told in its monthly bulletin. This was a powerful instrument. It's incredible, cannot be repeated. Times have changed. And in the ECB, from the first day on, because I was responsible for the monthly bulletin, etc., I always martyred my mind, because it's now 20 languages. It's now 20 languages. It's not only language, but once my colleague, Padua Scopa, came to me and said, Otmar, this is too much now. On every second page, we mention in an article price stability. And I said, only on every second page? So, so we have the social media, TV, etc. And I think it's impossible for the central bank. It's an illusion to really approach to the general public. It would be extremely needed. I think the best communication of the central bank is by we maintain the stability of the currency. Trust us, we deliver. Deeds and words go together. I think this is the best way, because I think all this discussion on communication becomes for me too artificial. If you just look what is possible, it's limited. It's limited to reach the general public. So I think the main communication is by convincing the public that price stability is a good thing, low inflation. Inflation hurts the social weak, people who are socially weak most. And the central bank stands for this promise to maintain price stability. I think this is the main communication.
Andy or Jill, do you want to respond to these two comments, or say something to these two comments and questions?
Okay, so I'll be briefer this time. Try at least. Okay, so let's just come back to the multiple instruments thing again. So I think we think that monetary economists think that monetary policy is most effective when market participants and business people and consumers can understand the strategy of the central bank. that if things go in a different direction, how the central bank will respond. Okay, we call it a monetary policy reaction function. Okay, you can call it a Taylor rule. Okay, but what we would call predictable, it's a little bit too strong, okay, but systematic, I think, is a nice word for it. Systematic policy is critical in all the models that Volker and others, you know, in the room and myself have worked with, okay, over the last several decades. Systematic monetary policy is critical to effectiveness. Now, for that to work, you've got to have maybe one benchmark instrument that you use and you highlight it. And then there's some other tools that are used in the background. We used to call them the plumbing, okay, that are making sure that that instrument is working effectively. For the Federal Reserve, its framework says the instrument is the target for the federal funds rate, set to within a quarter point. Okay, they could change that. They could easily make the instrument a repo rate or something else. Okay, but that's the primary instrument of monetary policy. There are other ones. They do work in the repo market. So there's an interest on reserve rate, and other ones. It's a whole toolbox, like the surgeon. Okay, has a bunch of different scalpels and all these other things. Okay, of course they do. But there's a primary instrument that's used to communicate to the public to say, here's our strategy. When the physician's talking to the patient, it's like, are we going to do surgery or chemotherapy or radiation? In what order? Okay, it gets more complicated in that case because there are more than one instrument. I think the problem here with the balance sheet is it makes the policy much more complicated and much less transparent and tends to be much less systematic and more risky. Okay, and so I would have said, reserve it for emergency use. And if you can avoid it, try to avoid it. And so it's in the toolbox, but you try not to open that panel of the toolbox unless you have to.
It's like this, you know, the stuff, the medicine which is poisonous, and you know, only one guy gets the key to open it. So that, anyway, I'm just. So, Jill, did you also want to react to those other? Otherwise, I'll collect, let's say, 3.
I thought the comments were really helpful, and I'd like to hear more.
Okay, so let's collect at least 3. I have to remember there were. If you previously raised your hand, can you previously raise it again? It was you, Mr. Langner, Alain, and then one question back there and one over there. So let's take, oh, Emmanuel, did you earlier? Okay. Okay, so I have 5. So let's see. So shall we collect all 5? I don't know. Let's try all 5, but keep them short. So let's start with Mr. Langner here.
Ooh.
Okay, let's start with Alain Dury.
Okay.
From Natixis.
Thank you. So I understand the discussion we discussed about the risk and the threat to central bank independence by expanding, the goals, the responsibilities, and so on and so forth. But the question is, how far we have to fight for central bank independence, especially what about the loss of central bank independence because of government's inaction? Take, for instance, the 2008 financial crisis. What could have been done differently just to be sure that you stick to the central bank independence?
Okay, I'm going to collect all of them and then we have selective responses. So, Mr. Lang.
I just wanted to support Mr. Levin that apparently it's very important that lawyers and economists discuss here about the terms. Because, I mean, we had a lot of legal research in the 1990s as well. And Otmar Issing has said in the end, and that's true, the economic kind of evidence influenced the decision. However, the lawyers had a lot of discussions, and in particular, if you were to have independence for the central bank, it was always clear that you would need accountability. The question is, what is accountability? And what Mr. Levin has defined as accountability was never meant accountability over here for the ECB. So we should be very careful with the different terms here, and we should define first what we discuss, because otherwise we will get a little bit blurry.
Yeah. I'm going to try to at least manage the questions, whether I can divide, but these are good points for further thought. So then I had Emmanuel, and then I have 2 more, and then we have a last round, and then we're moving on to the next panel. Yes, Emmanuel.
Thank you. I think you've asked the question, but then it got unanswered, so let me ask it again. So I think it's more directed to Andy, who seemed to be saying that the Fed has too little accountability at this point. Even though we have the Senate hearings, of course, of the chair, we have seen a development of communication with Q&As after every FOMC. We do see a lot of accountability in my view. So I would like to ask you, Andy, why you say there's too little of it. What would you do differently? How would you impose more accountability on the Fed in practice?
Thank you. And then I had two, gentleman there with the red sweater. So let's keep it brief, and then we have a brief round of answers.
Thank you very much for your stimulating contributions to the topics of independence and sovereignty. And I would like to, my questions pertain to these topics of control of the legislative versus the executive branch related to money creation and also the issuing of debt, which you were talking about. And the current topic, which is the digital money. Because if you look at Europe at the moment, I think it's the parliaments in Europe, in Brussels, and the national parliaments creating digital currencies together with the ECB. But if you look at the US, I have the impression that it's more the executive branch being active in the field of, coins or digital money. And so I would be interested in how do you see this? Shouldn't it be the role of Congress to safeguard that as well?
Okay. Very brief, last question.
Thank you. Thanks so much for the panel. Dave Kershaw from the London School of Economics. So Andrew, I hear that you don't like independence, but yet contained within a with cause removal right, the president can't remove a governor without cause, is a conception of independence from executive pressure. Now, we might want to call that insulation, I suppose. So my question to the panel, particularly to Andrew and Jill, is, well, does the with cause removal right really make any difference, right? There's a lot of fuss about the least cook case, but if the Supreme Court decides you can have at-will removal, will that really make any difference to the independence insulation component, especially in a country like the United States, where you have 125% GDP to debt ratio, a 6% budget deficit? To what extent does the central bank have any room to respond to executive pressure without being killed by the bond markets and the currency markets?
Okay, thank you. So maybe in reverse order, or maybe Jill, Andy, and then Otmar last.
All really good points. I'm hoping that over the course of these 2 days, we will really sort of get more precision, both on what we mean by independence, and I thought the question about the relationship between accountability and independence was a good one. But I also keep asking myself the question that David ended up with, and that is, how important is the removal power, how meaningful is a for-cause removal requirement to these ideas of functional independence that those of you on the banking side have been stressing? And I don't know that, at least right now, I see any defense of a for-cause limitation as going to sort of the accountability component that you all have been talking about. So, I hear about independence with respect to sort of taking direction. I think there is sort of subsumed in some of our discussion, funding or financial independence, certainly with your, capacity to deal with issues. But, that's for the Americans in the room. Are there more Americans in the room? I think this issue of removal power is very much at center right now.
Okay, so you asked about, gee, isn't the Fed pretty accountable? So Christina Skinner, and she's, actually in the back, amazing legal scholar. She was the one who really helped me kind of open my eyes to, actually the legal scholars have been working on the same issues for 3 decades in parallel, and I know nothing about what they've done. And I'm sorry, I'm just embarrassed. I'm really humiliated. I should bow to all of you legal scholars in the room, but that's part of the group thing. I'm working at the Fed. We had no interaction with our legal department at all, ever. In 20 years I worked there. So groupthink problems that need to be broken. And again, thanks to Katja and Volker for that. Okay, but there's my only law journal article that maybe I'll ever write with Christina is in the Vanderbilt Law Journal, peer-reviewed, okay? And the title is Central Bank Undersight, Assessing the Fed's Accountability to the U.S. Congress, okay? And it's 50 pages with, I don't know, Christina probably knows, but I'll say 300 footnotes, okay? Legal, this is the difference, but macroeconomists, we can write lots of sentences and just say whatever we think. In a law journal article, every sentence has to have footnotes, to explain, what's the basis for that assertion. Okay, but I'll just summarize briefly, okay? The Federal Reserve has lost about, we'll call it $1.5 trillion of taxpayer money on its balance sheet programs. And it never consulted with Congress before, during, or after. It's never issued a single report to Congress to explain why it did those programs, why it lost the money, how that's going to change it. Now, Kevin Warsh may come in, and he'll be the new Fed chair, and part of the benefit of having someone new is he might be willing to do that and revisit it. He's talked about a new Fed Treasury Accord. It could be partly related to this. But there was no congressional oversight, none, zero. Okay, now in 2021, the Fed, inflation was heading up into close to double digits. The Federal Reserve did not make a single move to the federal funds rate or the balance sheet programs, okay? This is when Chair Powell was saying it's transitory. There were no dissents. So part of this connects back again to Jill's comments and to what I said in the other panel. Okay, the lack of debate within the Federal Reserve itself during 2021 is problematic. Now, was there hearings in Congress about that? No. Why? Because Congress isn't capable of this. They're not capable of overseeing NASA. They're not capable of overseeing jet fighters. Okay, of course they're not. You have to have GAO. You have to have an independent IG. You got to have an independent evaluation office. And so if you want real congressional oversight of the Fed, you got to give the Fed the same help that Congress gets with NASA and these other agencies. And that's part of it. And the Fed, by the way, has been adamantly opposed to having any external scrutiny at all. I wrote a paper last year, it was following up on the work with Christina, to say the Fed should welcome an external independent inspector general. Well, guess what? They're like, no, we're not welcoming that. So they maybe again, Kevin Warsh, we'll see what he does now.
I will take up two issues. One question was about the nationality of members of the Governing Council. It's now 21 national governors, and I remember still when the committee of Central Bank governors discussed the future statute of the ECB, Karl Otto Pöhl came back and he was, to say the least, amazed that he should have one vote like the governor from Luxembourg. And finally he agreed to this statute because national central bank governors are not as representatives of their country, members of the Governing Council, but as representatives for a single monetary policy for the EU area, euro area as such. And I remember well when we, for the first time, reduced interest rates in April '99. The central bank governor from Ireland said, reduction in the interest rate is the least what our economy needs, because they were booming. But in the interest of the single monetary policy for the euro area as a whole, I am fine with this decision. And this is the thinking which should prevail. Is it wishful thinking? I have my doubts. If you look at all the appointments, I will not accuse anyone personally, but most appointments of national central bank governors are appointments of former finance ministers. And I cannot see that the main driving idea for appointing them was that they are committed to price stability. which you talked about expertise. Expertise is a technical issue. Yeah, but first, politicians, when it comes to appointment, should appoint people who are guaranteeing that they take the mandate of the central bank serious. But if you look around, this has not played a major role in all the discussions about persons. My second point is about accountability. The ECB is accountability towards the European Parliament. So it's questionable when Draghi went to the German Bundestag, it's questionable if the ECB president should do that, because in the end, then he should address all national parliaments. So let's leave that as a question. A definition of accountability, by the way, I had a long paragraph in my initial paper for this conference. I took it out because it was too long for the time given to me. But accountability for me is explaining why the central bank has made this decision, explaining the strategy, etc. It's not about defending that the monetary policy decisions are right. They can be criticized, of course, we live in a democracy, but it's not about discussing with the parliament, should we have a different strategy, should we implement other instruments, etc. It's just explaining and try to convince. But it should not go further.
Okay, I mean, maybe Otmar, if I can say, for the written version which we put out, let's put that paragraph about accountability back in, right? There are different views of accountability. That's very, very useful. Thank you. So I hand straight over to Katja for the second panel on the financial supervision side of things.